In this video, I'm going to quickly cover the S&P 500, the US dollar, and a variety of US dollar pairs, including EURUSD, GBPUSD, USDCHF, USDCAD, AUDUSD. And then I'm also going to cover oil today based on a viewer request. And so I'd actually like to take a quick moment to thank everybody who's liked and subscribed. And for any of you who do enjoy my content, I hope you will like and subscribe. And if you have any requests for anything you would like covered, please leave it in the comments below and I'll try to get to it in the next video. This is the daily chart for the E-mini futures for the S&P 500. And as I mentioned in the prior video, if we were to break above this cycle high, indicate the longer term pink cycle, which is about 7.5 months, that trough would be in. And then I also mentioned the final confirmation would be a break above the prior all-time highs. And we have done both of those after the CPI data release. However, there are some other things going on right now, which I'm going to cover specifically with the US dollar, which might indicate this is not quite as certain as I normally would expect. Under normal circumstances, I would say there's like a 90 to 95% chance this trough would be in. But because of some things that are happening with the US dollar, there's still about maybe a 5 to 10% chance that this could sell off and we do break below this low and the trough does get shifted over. But for now, because the trend is clearly up, we have to give this the benefit of the doubt. As I mentioned in the prior video, I will still be sitting this out as long as this continues higher, because at this point, after missing this trough, you're just FOMOing into a move and we're almost about halfway through the cycle. Now, this is extremely bullish, and particularly at the beginning of these longer term cycles, you do tend to get a lot of bullishness. This is more than usual, but this could give a very late peak and then a small trough if this is indeed the initial trough of the 7.5 month cycle here. However, it is best not to try to FOMO into these moves once you're halfway into a 2-month cycle or beyond halfway into a 2-month cycle. What I may do is, if this does continue up with some good strength and then this next 2-week cycle trough comes back to retest the all-time highs, that might be a place where I'll put on a little bit of a long position, not looking to get super aggressive, but a type of trade where I could shoot for 40 to 50% rather than some of the other trades that I look for towards the beginning of cycles where I'm looking for 100 or more % on the trade. This is the DXY, the US dollar daily chart. And so as you can see, we're expecting a trough of about 5 months, a little more than 5 months in pink down here. And we are also at the end of this it's a little more than 2-month cycle here. And we are coming into this trend line, which is from the original trough for this 5-month cycle to the midpoint of the cycle, which is the trough of this 2-month cycle. So we're coming into that trend line right now, as well as the median line. This is a corrective median line. So when you are expecting a correction, you want to, depending on what cycle you're expecting the correction for, you will use the prior cycle high, the current cycle low, and then the current cycle high. And as you can see, we hit the upper warning line before selling off, and now we are moving towards that median line, which is exactly what you would expect for this type of correction. It does not need to hit this and turn around immediately, but we are running out of time in all of these cycles, and we are almost at the end of this 2-week cycle trough here. This is the reason why I think the possibility that the S&P 500 is not done correcting is, well, still a possibility, because we should, if we do get this trough here, this should give us some pretty good strength to the upside. It could give us a little bit of strength and then fail, and then we could have a negative cycle, but I don't expect that. As I discussed in a prior video, we're still towards the beginning of a much longer term cycle, which would indicate that we should still have more bullishness to come in the US dollar. And so if this does trough here in the next few days, that could be a reason why this actually fails. Now, it is possible that they actually move in a correlated way. So the dollar moves up and the S&P 500 moves up. But typically when the dollar is gaining strength, the S&P weakens a bit. It does not necessarily have to correct in a big way, but it will typically at least weaken a bit. And so that is why I'm still not 100% sold on this being the trough, which again is fine because, like I said, I'm willing to sit out for most of this, maybe take one trade over here and then wait for this trough to come in to go long, because then we'll have a much higher degree of confidence, and then here's where I'd feel much more comfortable being aggressive to the upside. Okay, I'm going to go through some of the dollar pairs really quickly here, and this is also lending support to the idea that the dollar very well could be bottoming soon, and therefore the S&P 500 may still have a top yet to come. And so this is the EURUSD daily chart. We did just blow through this area of supply. I'm going to erase this. I'm actually going to erase this one as well. And we are coming into a much longer term. So if I zoom way out here, this is a much longer term median line set here, which we have respected once, although we did hit a sliding parallel, which I've discussed in prior videos. We respected it twice, a third time, a fourth time, and now we're moving back up into that sliding parallel right now. Additionally, there is another median line set, a shorter term modified shift here in blue, red, and then the blue happens to line up mostly with that sliding parallel. We're coming into that right now, and we're moving into that with a lot of speed. And as I discussed with the EURJPY trade that I took a couple weeks ago, when you move up with great speed and there is little to no correction in here, I think this might actually be the trough of this particular cycle here. I'll put it here tentatively. This particular trough is not too consequential at this point in time, but we had minimal correction and then a huge move up again. Those are the kinds of moves which tend to also come back down pretty quickly. And so we are coming into this potential resistance area. We are also going to be hitting this median line set. We go from low to high to low. We're achieving that target at an upper warning line, or actually two upper warning lines. One is a sliding parallel, one is the modified shift upper warning line. And then we are still expecting potentially a lower low than this in this cycle here. And the only reason why that would still be able to happen would be if the dollar showed some sudden bullishness. And by sudden bullishness, I mean a lot of bullishness, as if it were ending its 5-month cycle. Even if that is the case and the dollar is ending its 5-month cycle, we don't necessarily need to make a lower low here. But I would not be surprised if we found resistance here and this came back down to at least test this lower warning line here. This is the GBPUSD daily chart, and as you can see, we have something very similar going on. We have a very long-term median line set here. It's a modified shift giving us this blue upper warning line, which we have previously respected after also achieving a median line target here. And it does appear as if this could be a resistance area. We have come nowhere near this median line here, so this might not be a valid median line where we achieve the target, but that doesn't mean the upper warning line can't still provide resistance, again, as it did over here, and we are just about at it right now. This is the AUDUSD chart, and we again have some very similar things going on. We have previously broken out of this median line here. We have done that again, but we do have another shorter term median line set here where we are nearing the upper warning line, and we're actually in this supply area right now. I'm going to delete that from the chart. I haven't talked about these in prior videos because I think they kind of deserve their own time, and they're not the primary tool that I use for trading. The primary tools that I use for trading are the time cycles and the median lines. But in this case, as you have seen with the EURUSD and the Australian dollar, and actually I did not show it on the GBPUSD, it's also in a supply area. So they're all in areas of supply, and they're all reaching upper warning lines, while the dollar is potentially reaching its target at a major trough. So there's a lot of potential for these to reverse. This is the USDCAD daily chart, and we can see the same thing. We're expecting a longer term trough. We're in an area of supply. I'm going to go ahead and remove that from the chart. And as I've mentioned a few times already, we are testing or back testing this upper warning line. What is a bit concerning is we have broken and closed below this lower warning line, which I would expect to hold. However, if we can recover that very soon, then it won't be too concerning and we can put a sliding parallel down there. But we are also at this area of potentially major support. We were in this zone for quite some time, and now we're just backtesting it. And that's essentially how we got that area of demand. This is the USDCHF daily chart. And again, it is the same thing as all of the other dollar assets. We're expecting a major trough. The timing is starting to line up. We do potentially have further downside in the USDCHF, as we could reach down towards this lower warning line, and then we would also get into this area of supply right here before we potentially put in this longer term trough. So I just wanted to run through all of those pairs really quickly just to show that they're all kind of supporting each other in the idea that the dollar could very well potentially be putting in a major trough right now, as the euro, the GBP, and the Australian dollar are all moving into major resistance areas, while the US dollar is potentially moving into a major support area. And all of this is happening at the right time from a timing standpoint. With all of that said, that does not mean that I'm shorting EURUSD yet, and I'm shorting GBPUSD or AUDUSD yet. You have to wait for confirmation. And how will we get that? Well, as I've mentioned in prior videos, you need to wait for a prior 2-week cycle low to be taken out, and that will confirm that the cycles are turning over in the longer term, and we should then expect further downside into those troughs. But until then, you cannot take any trades like that. You don't want to trade against the trend. You want the trend to show itself, and you want to trade with the trend. If you have a thesis or an idea that it's going to roll over, you still have to wait for it to do that. And this is a perfect example. As I had mentioned a couple videos ago, I was expecting this potentially to roll over and take out this trough. It did not. Had I gone short, I would have been very upset here. But that's why you wait for confirmation. Once the cycle goes negative, that significantly increases the probabilities that then your thesis is correct, and then you can trade that way. But you need confirmation first. Finally, I'm going to talk about crude oil futures. I don't track this in a very detailed manner. I don't think these cycles are super consistent, therefore I don't trade it. However, I did have a viewer request this, so I had to update this. And actually, it's funny, so I had to change the cycles. The cycles that I had previously over here, they did not line up with the cycles that I have now. And so that just made me feel more confident in my decision to stay away from oil futures. However, there are some cycles that are sort of consistent. The pink cycles, which, how long are these? Let's see, I've got that at 210 days. But you can see this one went pretty long. And actually, this one you could have put here, and then you put another trough here, and then you see how those are not going to line up. And then if you put that there, then you could say this one is long, and then they would line up again. I don't know. I think they're pretty inconsistent, as are the blue cycles, which are shorter as well. Some are very long, some are very short. And so I don't feel super confident in that. What I do feel a little more confident in is maybe these longer term cycles, but even here you can see there's a huge gap there. That would be an unusually large gap, because it's more than 50% of this cycle. It's almost as if, I suppose, if we clone this, this should come in over here, and then you can see that trough though, that's about 50%. And so that could suggest this is a mixed cycle over here, where it puts in the high, a low, and then it actually puts in the final trough somewhere in the middle of the range, in which case then this would come over here, and we would be expecting a major trough coming in soon. But it doesn't look like, I mean, it's running out of time to sell off in a big way. It's possible, but I don't think that's likely, so I like this here better. But if we zoom in on the more, actually I'm going to stay here for a moment. I don't particularly like these median lines either. I think this negative value over here is kind of throwing everything off. With that said, if you look back historically, I'm going to put it on the weekly, oil does go through long periods of sideways action, right? We get a lot of sideways action here, a bit of sideways action here, you know, over here. It does go through periods like that. And so while I'm not confident in this analysis, we're back on the daily chart. What I do think is possible is that we put in some of that long sideways action as we move towards this median line, but this comes way out until the end of 2025. I do have these pink cycles on here, which again, they're roughly 210 days. It does appear as if we are moving down towards one of those troughs, but we may have just bottomed On the lower time frame, these blue cycles, I'm not sure how long these are. They're about 50 days. It looks like we might be putting in the trough here, but I would expect this to potentially roll over. Maybe we're coming back down towards this lower warning line. It's a modified shift. We hit the median line target. We overthrew this upper warning line a little bit. Perhaps now, if we're going to continue to correct, we can put on a standard median line set, which it looks like we have been respecting pretty well. Perhaps we'll come back up, test that again, and then maybe we'll have the sell-off to this lower warning line here. This is a bit steep, so I don't know if we'll necessarily achieve the median line on this. But in the longer term, I do think if we can continue to hold this upper warning line here, the median line set, which would be based on the prior maroon cycle, if this is indeed the high, perhaps this can bring us down, and you'll see this median line happens to line up and intersects with the longer term median line towards the end of this maroon cycle. So perhaps for the rest of this cycle we'll be moving sideways to down, but my confidence in this particular analysis is not very high. As I mentioned towards the beginning of this, I don't find the oil time cycles to be extremely consistent, and I struggle with the median lines on oil as well. So please take all of this particular analysis with a grain of salt. That said, if anyone else has any other requests for anything else to cover, I do plan on covering gold and Bitcoin in future videos. Perhaps I'll do those in this weekend's video. But any other requests, please feel free to leave them in the comments below. As always, thank you for watching this video, and be sure to subscribe for more.